Hey, what's going on YouTube? Welcome back. It's Travis here with JT Wealth. In today's video, we're going to talk about two recently completed SPACs that are still trading below $10, but have between 80 and 200% potential upside. So let's get into it. All right, what's going on, everybody? Hopefully everybody's having a good Monday. I know that's hard to do. Nobody likes getting back to work, but it does mean the market's back, and it has been a pretty green day, so that has been exciting. So hopefully everybody's enjoying themselves. If you don't mind, take 2 seconds out of your day, smash that like button for me, and consider subscribing to the channel if you haven't already. And like I said, in today's video, we're talking about two stocks that recently completed their SPAC merger, still trading below that $10 mark, but have amazing upside potential in the next 12 months. Now, there's a lot of material to cover, so let's jump right into it. And the basis of today's video is off of this article from TipRanks. Initially, it was 3 strong buy stocks under $10 that are poised to take off. Well, I got rid of one of the companies because I just don't like it. I don't see the future potential. Also, it's a biopharma company, which to me is very, very volatile, and I don't necessarily like talking about them. But we do have 2 of the 3 that are recently completed SPACs, and they have fantastic upside. Now, if for whatever reason you're new to the idea of SPACs or the word, it's Special Purpose Acquisition Company, and that's just a quick breakdown of how those work. Now, in relation to today's stocks we're going to talk about, they are smaller cap companies, and that brings some advantages besides just lower initial buy-in. Now, simple math says that a smaller company can grow in value faster than a larger one. Think about the scale of increase required for, say, Apple with a $2.4 trillion market cap to double in value. Now, a company with a $240 million valuation, however, will have a much easier time reaching doubling its value, right? It's just common sense. So both of the stocks we're going to talk about today have a market cap under $2 billion, a share price below $10, and they're small cap tickers that have strong buy consensus ratings from the analysts looking at these stocks. All right, guys, and the first company that I'm most excited to talk about today because it has the absolute highest upside potential of the day is XOS, ticker symbol XOS. Super simple to remember. Now, they're trading at about $6.56 on the day, but check out that price target in 12 months, $20, which is over 204% potential upside. And all of the analysts agree it has 3 strong buy ratings. Now, XOS is in the EV tech realm, and a lot has changed with that. So much improvements have been made, and it is 100% going to be the future in a lot of states, and we can certainly see EV making big moves across the market. And XOS is going to be no different. They're an electric truck maker specializing in all-electric medium and heavy-duty trucks optimized for last-mile commercial operations. And this is a niche particularly well-suited to EVs, especially larger, heavier models with charge ranges between 100 and 200 miles. And that is sufficient for daily operations in urban areas, making final deliveries in the last mile of a supply chain operation. Now, XOS currently has their EV truck platforms operating with both Loomis and Wiggins Lift Company, among others. The company is one of many that has taken advantage of rising market conditions this year to go public via the SPAC merger, and they entered through the NASDAQ with that SPAC earlier this month. The XOS ticker started trading August 20th, and the merger brought $216.7 million in cash to the company. Now, in stark contrast to a lot of the smaller companies that have been pushing EV vehicles lately, a lot of those companies have their vehicles in pre-order, meaning they don't necessarily have the manufacturing ability, or they don't even have vehicles on the road yet. XOS has both. They have vehicles currently operating on the road today, and they are under construction with over 2,000 orders still in the works for the next year. They did have a bit of a backlog because of what's been going on in the last year and a half, but they are pushing out their vehicles. They already exist, and that puts them ahead of the rest. Now, if you didn't know, XOS completed their merger with the company NextGen, who also happens to be involved with Virgin Orbit. So there you go. That's just kind of a little quick background on who they did their SPAC with. And XOS is entering into this Class 8 truck market at a great time. It's kind of the start of what looks like a multi-year upcycle amid shortages and delays at the main internal combustion engine manufacturers, of course, because of the chip shortages, right? So this can only help the company. And they have subsidies and upcoming regulations providing an additional tailwind for the EV companies. And the need for new capacity in the class 5 to 6 walk-in vans may be even more dire, so the openness to trying EVs is going to be even greater. Okay, so XOS with over 200% potential upside in the next 12 months is our first company of the day. Now let's talk about our second company. And they're Taboola.com, ticker symbol TBLA, still trading below $9 on the day, with 5 analyst ratings coming in at a strong buy rating, with a 12-month price target of averaged out at $16.40. That is over 83% upside in the next 12 months alone. Now, Taboola is a name you've probably seen while surfing the web, even if you didn't know what they were. Now, the company is a recommendation engine, and they gather data on the sites you visit and provide side banner links on your web history. The click generates revenue. So every time you're clicking on the bank they provide, it creates money for that company through advertisements. And that's paid from the advertiser straight to Taboola. And it's a huge online business. And while this type of targeted advertising has generated its share of controversy over data privacy issues, we all know that's not going away. Now, whatever your concerns are over those privacy issues, just remember, it's not like they're going to run out of product. Me and you, we're the product. They're tracking everything we do and selling that information to the advertisers. And not small advertisers, huge advertisers making a lot of money. Taboola made over $1.2 billion in revenue just last year alone. They worked with over 13,000 advertisers and were able to create 500 million click ad reaches per day. And Taboola went public June 29th through a SPAC merger with Ion Acquisitions Corp. Here on the Taboola website, you can see they list some of their exclusive partners with top publishers around the globe, including USA Today, The Weather Channel, NBC, MSN, Business Insider, Bloomberg, CBS News, and Fox. In addition to those huge advertisers they work exclusively with, at the end of July, Taboola acquired Connexity, an e-commerce platform with more than 1 million month transactions, and that acquisition will allow Connexity's merchant clientele to work with the Taboola platform. And by adding the Connexity e-commerce platform, they significantly improved the optionality, accelerating Taboola's offerings and improving their yield. Their high-impact ads are going to attract more video budgets and more non-traditional placement. So when I think of Taboola, honestly, I think they have a fantastic thing going. They're not losing their product, because that's us. Advertising to people is so important. And I also wonder a little bit if this product is in fact as successful as it is, there may be other products out there, larger companies, who may decide to come down and pluck up Taboola at some point and push all of that advertising over to some of the bigger brand names. Who knows if and when that could ever take place, but it's certainly a possibility because they have a fantastic setup. Alright guys, so those are the 2 stocks for today that just finished their SPAC process, are trading under $10, and have 80% up to 200% upside potential in the next 12 months, and that of course being Taboola and XOS. So let me know in the comment section down below what you think of these 2 companies. Are you invested in them? Did you perhaps buy in when they were just a SPAC? And are you still looking at them now that they are in fact a standalone company? Let me know your thoughts down below, and as always, don't forget to hit the smash the like button and consider subscribing to the channel if you haven't already. Until next time guys, thanks so much. Bottoms up.